Yo, yo, yo. Hey, this music's not monotonous. Yeah. Hello, hello, hello. How are ya? How's your mum? Yeah, Anna, it's been a tough couple of days, yeah. All right, time to sign up for the presentation this afternoon. Oh, stretch my back out. Oh, it's been a long day already. Boom, 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 boom. It looks cold outside, but it ain't raining. It's not great, but it's enough. Yeah, look at my upload. $320 uploads, good. So we should be steady. Most people only get 40 up, so 320 up is good. It's hard sitting in your desk all day, huh? What do you guys want to trade today? What's on your mind? Is that right, Johnny? You had to give up the Volvo? RAV4. Yeah, they're actually good. All right, you guys ready to go? You're like, of course, I've been here for 5 minutes. I'm ready to go. All right, we'll get rid of this horrible, horrible, horrible music. Get rid of that horrible, horrible, horrible music and turn the love on. Good morning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. I'm a currency trader just like you. I started about, year 2000? But I didn't really start taking it seriously until about 2004 when I quit my day job as a venture capitalist. And by the way, I was happy. I thought that was my dream job. So I gave it all up for Forex. Now, you might have been in a similar situation. Or maybe your situation was you hated your job. Either way, somehow we all got here. And we're trying our best. And I'm going to teach you how to build strategies and then formulate, let's say, a strategic plan. And then you have to have the tactical ability to actually carry it out, right? So I wrote a book called Strategic and Tactical Forex Trading. That's how I think. I create a strategy first. And then you go and look at the price time data. Okay, so anyways, very cool. That means you need to be able to look at the facts, both technical and fundamental, and thread a narrative that makes sense. And then you have to have solid trader psychology to be able to carry it out consistently over long periods of time. In a book that I'm reading about samurai warfare that was written 600 years ago, they said the number one thing was the psychology, the trader psychology, right? Well, of course, the psychology of a samurai, right? But anyway, so I look at it, I'm like, oh my God, that's exactly what it's like to be a trader. So, you got to have the ability to master all of these things. So today I'm actually going to share with you some thoughts on the future based on empirical research that I've conducted, because I'm constantly doing empirical research, constantly. And so I'm going to share the next 90 days. I don't know the future any more than you, but I do have some facts. And we do have some, not just economic facts that we have now, but we can relate them to past scenarios that were somewhat similar and analogous, right? Analogous to now. So anyways, we can go through. We can go through that today. It's going to be at noon. So I think this is basically your last chance to sign up for that. I popped the link into the chat, but sometimes people are like, what's the link to that? And well, here it is again. So very cool. I hope you're there. By the way, this is QuantBox. This is a service that I own. As you can see, we met at 6:41 a.m. this morning. And this is a way to automate your macroeconomic research. Isn't that cool? When you look at what happened, look at all that. Look at all this research that we do. This is great, huh? It's great. Look how pretty that is. This is the data that we look at. What? Look at the data that we look at. Has such pretty... Oh, it's so amazing, Wayne says. Oh! Anyways, look. You want to make informed decisions? If you want to know how to make develop a real strategy based on macroeconomic facts. If you just want the confidence to let your winners run, QuantBox is for you. youtube.com/Forex.Today. Here we are. There we are. That's us now. And then you go down here. There's also a link here. Let's see if it actually works. Yeah, to join the presentation today. There's a link to tradersway.com. A trustworthy and ethical foreign exchange trader that works with you but does not trade against you. They work for you, they don't trade against you. They wake up in the morning and they hope, maybe even pray, that you're successful because that's good for their business. Most brokers, they don't care about you. They're happy. In fact, they want you to lose money because they don't even execute your trades. They trade against you. So what kind of trading partner do you want in your Forex business? Do you want an execution partner to trade against you or for you? Traders Way works for you. Tradersway.com. Investor Bootcamp, that's the site I own. It's got pretty colors too. You like the pretty colors? Learn how to invest and trade everything. Yeah, but it costs $88 a year, everybody. $88 a year. Yay! Yeah. Cool. I'm going to add to this course, by the way. This is a free lecture. It's about 90 minutes, I believe. So I don't know. Then very soon, I believe, I'm going to add to this training course, which is, I don't know, 8 or 9 hours long, I think, maybe longer. But here's a free lecture out of the course. Which stock is more expensive, the $80 stock or the $8 stock? Ah, you know it's a trick question. You're smart enough. But can you do the math to prove it? Ah, math. Math. Wayne, I don't like math. Okay. Okay. You don't like math. You want to hold that back. You want to hold yourself back. Well, let me do the math for you, and I'll show you the logic. It's cool, right? You should do that course. You should do it. Cool. And then I wrote a book and all that kind of stuff. Yeah, good. Good. So let's take a look at the world. The biggest thing today, as you already know, or should already know, I can't imagine you don't know, but the biggest thing today is the Bitcoin news, probably at the end of the day. And so we're watching this quite closely. Okay, quite closely. So earlier, where's my drawing tool? I don't see my drawing tool. Well, let's bring it up again. There it is. Okay. So what did we plan earlier in the week and last week? We had plans like last week. Okay. Well, we planned this one. And the second one was down in here. We had a plan A and plan B scenario. Yesterday, the top was here. And the interesting thing is the conservative weekly target is here. So it seems like that held. The conservative or the aggressive monthly target is the higher one. Okay, so weekly, monthly, weekly. Seems to me we ran right into that, huh? Ran into the weekly and a pullback. This had to do with a fake press release. Actually, a tweet. Okay, actually a tweet. And so very quickly, it was debunked, and that's why you had this flash crash yesterday. And so now we wait. Now we wait. By the way, thank you for those that are signing up for the presentation earlier today. Right? Andrew, you're in. Boston, you're in. Thuso, you're in. Andrew, you're in. Abdul, you're in. PJ, you're in. Right on, man. Right on. Can they delay it once again? Well, what they're claiming is it was a hack. Well, that maybe it's true. Probably it's true. But I think there's probably a rationale to think that it was a pre-written tweet. Some manager thought long and hard about how to write the tweet. And so it was written, and then it was scheduled to be sent today at 5 p.m. And then the intern logged in and said, click. Don't accidentally click send. Yeah. Oh, yeah. So when you don't want to take responsibility for your actions, you just blame a hacker. I think it was an intern just click send. Whatever. So do we already know? I don't know the future. I don't know what the SEC wrote. Okay? I don't know. So we got to write it up. But what I do know is what I planned last week. Okay? Here's one top, and this is the other top. Projected last week. This is the buy zone. This is just how you trade. Okay? Look, I know every single one of you here knows me and probably have gone through my training course. But just in case there's one person that doesn't, okay? This is straight out of the training course where you buy down here if you're a bull and you exit up here if you're a bull. And there are no bears. There might be one dude that doesn't know this. So I state the obvious. Cool. So anyways, the trade could actually be done if it's a trade. Now maybe it's an investment and you're going to sit on it for a year and you believe Bitcoin's going to 100,000. Maybe 250,000. Yeah, okay, cool. Well, now you shouldn't be scared. Now, if the SEC doesn't come through, there's going to be a big drop. But there could be the market trading against everyone that's heavily long. And so you might get this double short, but I can't think that way. All I could do is get out of the position, go to cash. I'm in at 44 something. I don't remember. 44,444 maybe, somewhere in there. So there could be a scenario in which this collapses, because we don't get the expected outcome, or you get the institutional taking out stops before it goes up. All of that is, yeah, it can be, but you shouldn't be afraid of these things. You should ask yourself, what do you know? And trade that. And what you know may not exist on a 5-minute chart. Okay? What we know is that this 21 is in control. And even if there's down before there's up, it's still the right opportunity for you, right? It just might be not today. Yeah, might have been 2 days ago. Cool. My WTI. Okay. We talked about it yesterday and the day before. And yesterday I said, like, oh my God, if you're a bull and you didn't buy a retracement to 70, I don't know what you were looking for. I just don't. And so then we were at like 72.5. So there's your higher high. Then it dropped into a higher low in the daily buy zone. And if you didn't buy that, I don't know what you're doing. If you're trading oil and you're a bull, I don't know what you're looking for. The rest of this, okay, so the potentials, we go up here, that's a higher high. And then what's the logic? Well, the logic is you're going to look left, and you're going to say, I don't know, something like that could be the interesting thing in the future, something like this, somewhere in there. And so maybe up the rest of the day, down tomorrow, and then like that maybe. Well, we haven't even started today. Okay. But if you're not doing this and you're bullish on oil, maybe you don't understand price action. Well, $88 will solve that problem. Binary Wizard says no, it'll test the trend line. What time frame are you on? What trend line are you talking about? Because there isn't a great trend in play. You're going to have to make a fundamental decision. But let me know what time frame and whether your trend line is up or down, and I'll try to decipher the code from there. So Bitcoin, we did SP 500. So last week, I believe it was, I pointed out that this was a daily 21 and that this was a monthly buy zone. Both are supportive. Okay, and great. Then we got a respect, and we got a very surprising, actually, rally in the stock market. So this was surprising. So then I think it was yesterday I said your decision is you got to use things like Fibonacci to buy a dip. Remember, I asked you, how much of a discount do you need to make a decision? A 33% discount or a 50% discount? I said it was kind of like picking up winter sweaters in January. I think I even said Mervyn's, which is a weird, obscure store. I don't even know if they exist anymore. And then I brought up that in the south of the United States, we have a place called Belk's. My wife one day said she was going to Belk's. Do I need anything? And I'm like, Belk's? What the hell is a Belk's? Like, you couldn't pick a worse name. I'm like, it just sounds terrible. I don't want anything from a place called Belk's. But anyway, so I remember talking about this. And in January, when it's cold, they sell their sweaters at a discount because they're getting ready to put in stuff for the spring. So they have $10 million worth of swimwear coming in. And it's way too cold to go swimming. So it's so funny, like when it's cold, the price of sweaters should go up. But it's not how the world works. Instead, when it's cold, sweaters drop in price. It's strange, right? So you got, and it's weird because people go to these stores and they're like, normally this sweater cost $150, but now, and only now, you can get it for $99 on sale. And you're like, dude, that sweater's made out of cotton. It's worth $5. How could you charge $150 for something made out of cotton? How ridiculous, right? And that's when I leave. And it's like a glorified sweatshirt. But anyways, so that was the message yesterday. Are you going to buy the dip? And it dipped. And it hit the 33, and it's held. It's not gone. It's not long and gone, but the short has been, stabilized. Look at it on a smaller time frame, and, right, lovely till your mum. Look at that. Down to my line, pop. Look, this is 33. It's not even a Fibonacci. It's not even Fibonacci. Fibonacci is stupid. I happened to be flipping through YouTube yesterday, and there was some like trading guru that can make you rich, and you got to know Fibonacci crap. And I'm like, what a bunch of nonsense. I hope you don't believe any of that. Okay? Look, are you a bull? Yes. Okay? Did it reverse and go up at support? Yes. Did it make a higher high? Yes. Did it make a higher low? Yes. Buy it. And if you waited for the 382, I'm not sure if it made a 382. It got pretty close. Binary says, I'm a bull trend line third touch. Again, you're not telling me what time frame and what direction. Give me a time frame, Binary. Give me a direction, bullish or bearish, and I'll find it. Okay? Now remember, oil's going to move today, Binary. It's going to be a big move today. But the bigger move is yesterday when it comes to oil. But anyways. Okay. So anywho, are you a bull? Yes. Why? Fundamentals. Like today, the EIA releases information. Okay, you make decisions. Oh, wait, this is the stock market. Anyways, the stock market. Are you a bull, yes or no? Okay. Well, if you're a bull, this is your monthly buy zone. And this was set in stone on January 1st, but was widely set up going back to the last week of December. So we knew when we were at 4,800 that somewhere between 4,700 and 4,650 was our buy zone. You have to understand that first and foremost. One, you need to be a bull or a bear. And then two, you need to know how to use pivot points. Oh, by the way, has everyone read the pivot point article? We posted it. FX Bootcamp. Now, let me just pick up the main site. Okay. Just very quickly, go to fxbootcamp.com. Click Forex blog. It's right there. Smart money, pivot points, and swing trading. And it's a beautifully written article. With a companion video. Okay? Lovely, with your smile so worn and your teeth so green. Oh, baby, you smell like Vaseline. Is the Japanese earthquake weakening the yen? Oh, no. Absolutely not. Absolutely not. Okay? All right. Let's go back to the, I don't know. Let's talk about that for a second. Thank you for the question. All right. So the question is, what is causing yen weakness? Now, I have all these set on 1 minute. So let's put them on hourly. Hourly. Okay. Oops, that's a daily. Hourly. 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 I was on scalp mode earlier, so I got to put them all back to hourly. All right. All right. Let's talk about an earthquake in Japan. Okay. You're Japanese. You're a homeowner. There was a giant earthquake. Part of your home was partially destroyed. Not destroyed, but damaged. Your home was damaged. And it's widespread in your town, and you're sort of in the state of emergency. And so people are not going to work. Because most people have significant damage to their homes, maybe something fell in their car, but whatever. Okay, some roads are damaged, some infrastructure is not working, so on and so forth, right? Okay. You need cash. Okay, green melon? You need cash. You need some home repairs. You might not be collecting a regular paycheck, depending on the type of work you do. Your iPhone was damaged. So you got to work on your house. You got to buy an iPhone. You're going to have to eat at restaurants for a couple of days because, your home was damaged. You're going to need some cash to hire some workers. Okay, it's complicated, right? All right, your demand for cash went up. Green melon. Demand for cash. Okay, there is such a thing in the world of economics. Okay, so you have something like this and like that. And let's do this in blue. And I need my drawing. Okay, so this is the price and quantity of money, cash. Okay. All right. So you have demand. And you label that demand. And guess what? This is usually a trick question. I'm not going to go through that today. This is the supply of money. It's not sloped because there's that amount of money. That's the quantity of money. That's it. The quantity of money has been determined by the central bank and the central government, right? That's how much money there is today. Okay? Oh, and I put price there instead of demand. Hang on. So let me go back to the pink. I got to correct a mistake. That's a demand. That's a D, not a P. Okay, demand. So the only thing, so supply is fixed. That's how much money there is today. That's how much Japanese yen there is today in the world. Okay? And because many Japanese investors have money invested outside of the world, outside of Japan, see, if you invest your money in Japan, like in bonds, a nice safe thing, you actually lose money. It has a negative return. So you don't buy Japanese government bonds. You just don't. So you have your money parked in Australia or Canada or the United States or something like that, right? And you're earning income from that. Okay, great. But suddenly you need cash. You need more cash than usual. So demand for cash goes up. And we will label this now demand 2. What are you doing with this cash? Again, you need to buy a new iPhone. You're going to need to eat at restaurants a little while. You got to hire some workers. You need to buy some material. And, you need to repair your home. Okay, fine. So demand is the same, but let's look at how values change. So I'm going to do that in green. We did green. Purple. Okay. So at equilibrium before the earthquake, you had a price. The value, you can do price or value. The value of your Japanese yen we'll do V1. That's the value of Japanese yen at that supply, or at that demand. Supply is fixed. Now, demand is increased. Well, you're like, Wayne, I don't get this. Okay, we do quantity 1. That's quantity 1. Okay? And we're stuck at quantity 1. But demand has shifted. Okay? And now we're at here. There's a scarcity. Okay? Demand has moved this way. There's more demand and less money. So the value goes from V1 to V2. So the question that I was asked, is the yen weak because of the Japanese earthquake? And I think what happens is people think, well, that's bad. The earthquake is bad. Everything's damaged. That's bad. That's going to hurt the economy. That's bad. So therefore, that will weaken the yen. No. It's logical, but it's incorrect. So the value of the yen got strong related to an earthquake. If there's damage. Okay? Okay? If it forces the Japanese, so now we're talking about the entire economy in aggregate, if it forces them to bring money home from their foreign investments, okay, then they're selling their foreign investments, which is in foreign currencies, and then they're buying the yen to bring back to Japan. So they are selling foreign investments in foreign currency and then converting the foreign currency into Japanese yen. So they're selling the foreign currency and buying the Japanese yen. So you own a foreign bond, you sell the foreign bond, you get cash, but the cash is in the wrong currency. So then you sell the currency to buy the one you need, which is in Japan, the Japanese yen. You need the Japanese yen. So you're selling Australian dollar and you're buying yen. And therefore, on aggregate, if there's suddenly lots of buyers of Japanese yen, the value of the yen goes up because the economy was destroyed. Green melon. Yeah, I suggest you sign up for today's presentation at noon. If you want to see how, if you want to see how fundamentals are done, man, I'm telling you, it's good. I have to go back. I don't know what the link is. Quant Box. I know it's on Quant Box. La 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 la. Here we are. So in just about 3 hours. Yeah, BW, it is a different mindset to be a trader or investor. How long are you in a trade typically when you trade stocks, BW? Are you in it for 15 minutes? Are you shaving a few points off Amazon or Apple? Okay. Yeah, then you should be fine with Forex. But there is a different logic. Look, honestly, and this sounds like a plug, but it's just, I don't know, it's the solution. Go to Investor Bootcamp and take the courses. Almost everybody here has. Okay? And you'll get a better sense of Forex. There's a lot of Forex stuff. And just get your head wrapped around that there is a difference. All this, also, my guess is you don't do any fundamental analysis. Very often when people are relatively new to Forex, they have no idea what's going on. And then they want to go into the ring with a professional. Can you imagine? You're like, hey, I heard mixed martial arts exciting. I think I'm going to just try some mixed martial arts. Can you imagine getting into the ring with a professional mixed martial arts expert, an MMA expert that's been training and fighting, let's say, for 10 years? Jiu-jitsu, karate, judo, taekwondo expert, right? Someone that's like ripped, spends 8 hours a day working out, but then also knows how to do wrestling and choke holds, and they can break your arm, they can snap your neck. And you're like, hey, it looks like fun. I think I'll try it. Have you guys seen it's like Jackass 3? I think it's the movie. If you're not familiar with them, you don't need to be. But there's this scene where these just regular guys, they have a challenge. All right. So they get a professional boxer. This Irish dude, if I remember correctly. Just a boxer, not a mixed martial arts guy. Just a boxer. Okay? All right. And here's the thing. They each get to punch the boxer as hard as they possibly can in his stomach. So he just stands there with his shirt off. I think he's even flexing his muscles, right? And they hit him as hard as they can in his stomach. And then when they're done with that, he gets to hit them as hard as he can in their stomach. Oh my God. It's so horrible to watch. Because they hit him, they almost break their wrist hitting his stomach. He's made out of stone. A person like that is literally made out of stone. Well, not literally, figuratively made out of stone. And then a regular person, oh my God, can you imagine? So anyways, I'd focus on the training, man. You know how to trade stocks? That's awesome. You're going to pick up everything really quickly. But it's $88 a year, bro. Like, that's all I can say is like, if it was $888, I'm like, oh, okay. But you should take it. Yeah. I think you'll pick up a lot of things. But the thing is, I might expose what you don't know. So if you don't know anything about monetary policy, but you're trading money, I'm going to beat you. Right? The odds are, if I'm an expert in macroeconomics and monetary policy, what are the two major things? Okay, monetary policy in the United States dictates the value of the dollar. That's one thing. So if you don't understand monetary policy, but then you're trading the dollar, you're almost like, who was it, Green Mellon, who said, well, okay, so there was an earthquake and that's bad for the yen, right? No, you don't understand monetary policy. You're done. You're burned. You're screwed. There's no way you can trade this. If you don't know monetary policy and you're trading money, it's just like Michael Jackson would say, ignorance, right? It's just ignorance. All right, so there's monetary policy to understand the value of money. The second thing is macroeconomics. Okay? Monetary policy focuses on the stock, right? The supply of money, and therefore the value. And that can change based on the country's monetary policy. The other one is not the stock of money, but the flow of money. Macroeconomics is the flow of money around the world. Now, if you don't understand that, how are you supposed to trade Forex if you don't understand the flow of capital? Because if money doesn't cross a border, the value doesn't change. In a closed economy, okay, El Salvador, right? Cuba is a better one. Cuba doesn't trade outside of its borders. So all the money in Cuba stays in Cuba. The value of money in Cuba never changes. So what changes? What makes 100% inflation and then another 100% inflation increase if the value of the Cuban peso never changes? The demand for the dollar changes, but the value of the Cuban peso never changes, because I'm sure you're not going to your local bank and you're like, I want to get rid of euro and buy some Cuban peso. No, it doesn't happen. In fact, you can't even do it. So the value of the Cuban peso never changes because it never crosses a border. So let's go into the bigger concept again. You don't understand macroeconomics, you can't trade Forex. You're screwed. You might as well just quit. You're like, oh, but Wayne, I'm a scalper and I do great. Okay, but I still believe, and now I'm talking about my belief system, I believe you're at a disadvantage. I think if you're a scalper and you're profitable, I can make you an amazing trader because you already have some God-given skill of being able to scalp consistently over time. Now, I've rarely seen people be able to do it. Okay? Rarely. I think it's rare. Okay? I think it's rare. But if that is you, oh, I could really, it's like a coach getting a young Michael Jordan. And you're like, oh man, you have talent. You can do almost anything. And your work ethic is extraordinary. So, let's teach you some defense. Let's teach you some passing. Let's make you a complete player. Okay? I'd like to do that for you. But I'm pretty skeptical that you're consistently profitable when you, right? Over long periods of time as a scalper, and you're making money. I think if we just, like, how about this? I'll use a different example. So I'm not like talking about you and belittling you. I don't intend to do that. That's not my intent. But on these copy services, and I did this a few years ago, there's a lot of these copy services where you can just copy someone else's trading. I went through thousands, maybe 10,000 traders. Okay, now obviously I filtered to only the ones profitable. Okay, great. So now I filtered out all the losing ones. So now I'm down to only a few thousand. How many pass a basic risk-adjusted performance analysis? Meaning, if I'm an institutional investor and I'm comparing apples and oranges, I need a methodology to measure risk-adjusted performance, because I'm like, I can give it to this Forex dude, I can give it to a stock trading dude, I can give it to a real estate trading dude, I can give it to a Forex dude, I can do any investment. So how do you compare all these? Well, you do risk-adjusted performance, okay? How many of the 2,000 Forex traders, all profitable, passed my risk-adjusted performance analysis? And I'd say 98% of them were scalpers. They're pulling out 5, 10, 15, 20 pips at a time. Now, first of all, almost none of them had 3 years of track record. So, but even so, how many? 0. Oh, but you're the special one. So out of 10,000 traders, I've whittled it down to 2,000. And out of 2,000, there were none. Oh, but you're special. Okay, maybe you are. Okay. But nonetheless, if you feel you have the work ethic and the discipline and the consistency of being a scalper, then it's a blessing. We can add some other strategies, spot, swing, and like position trading, and you will become extraordinary. Maybe you are the world's greatest trader. Okay? I hope you are, in fact. Okay? So anyways, yeah. Very cool. Okay? So, yeah, let's look, what time is it? It's about 9. I think I want to burn through some trade plans, and then I got to go because I have that presentation. Right? I have that presentation from several weeks ago. Say I can't multitask. I have the presentation later today. Thank you. Okay, so put that there. Lovely. So we can look at global stock markets. Let's do that before we do dollar. Just kind of see where we are. Is this global or is US? No, that's US. Scan stocks, and then this is not set up properly. That's correct. I knew that. And let's do this vertically. Better. Okay. Nikkei. Okay. Nikkei is doing great. Why? They're giving money away for free. So tell me what you expect. What do you think happens when money is given away for free? Yeah, maybe it goes up, huh? Could be a rabbit, could be. Okay. Did you know it's normal? Yeah. It's trying to isolate, right? But anyways, it's fairly normal. What could I show you without giving too much away? Yeah, I guess nothing. Can't give anything away. So, but nonetheless, their monetary policy is keeping interest rates at zero and relative to other economies. Okay, when you're increasing the money supply, so let's reverse everything I talked about earlier. And is it still there, in fact? Can I open it back up? Yeah, okay. Let's reverse engineer this. You might need this on a different background, right? So let's change this template to blank. Okay, let's redo this. Nice. All right. Let's go back to our starting point of equilibrium. Okay, there's the quantity of money, right, which is equal to the vertical line of supply. Supply is quantity. A professor would say Q is equal to S, and you're like, what? And it gets all complicated. But that's the supply of money. Quantity 1. And at quantity 1, that's the value. All right, so let's change this narrative a little bit. The government is buying unlimited amounts of Japanese government bonds, specifically 10-year JGBs. When they do that, they put money into the economy. So the government issues a 10-year Japanese government bond, and then the central bank buys the 10-year Japanese government bond. They buy it with money. So they put the bond on the balance sheet and they put money into the economy. They exchange money for the bond. Okay? Technically a treasury. Okay. So what happens is when the central bank buys more JGBs, they increase the supply of money because that money wasn't in the economy before. See, if you buy it, you got your money from somewhere else. So, okay, your boss paid you money, okay, and then you go to your broker and you give the broker money, and then you say, buy this asset, so you buy it here, and the money just goes around, 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 around. I like to say the woman gets her hair cut at, or the waitress at Applebee's, okay, collects her tips, goes to Supercuts, gets her hair cut. And the woman at Supercuts who cuts hair eats lunch at Applebee's, because just like the supply doesn't change. The velocity, the amount of times the dollar changes hands increases, but not the supply. So this is the central bank putting money into the economy to buy bonds. The money didn't exist before, so now the supply has gone up. So we've changed our equilibrium. Okay. We changed our equilibrium, so now what? Okay. Now at supply 2, we have value 2. The government is buying Japanese government bonds. So that happens. Okay? There's also this idea that it's free money, so if you're going to use leverage, you borrow yen, and you're like, doesn't that increase yen? Well, only for a second, but as soon as you have the yen, because you borrowed it for free. So you borrow as much as you can. So for 1 minute, that increases demand. But then what do you do with it? Then you take your yen and you buy a bunch of Aussie dollar, or you buy a bunch of Canadian dollar, or you buy a bunch of US dollar. You immediately convert your yen into something else, which means whatever you converted it to goes up in value, because now you actually demanded that ultimately. And now the supply of Japanese yen, because remember, you levered up. You borrowed as much money with as much leverage as possible, Japanese money. Then you immediately converted it into something else. So now the supply of Japanese yen in the global market, the interbanking system, has gone up, and now the value has fallen because of leverage, which is a different, it's not necessarily like the supply of Japanese yen, it's the supply of Japanese yen in the global market, not locally. One had to do with just how much there was, and then how much is there in the global market, and a lot. Nobody, not even the Japanese, keep yen in Japan. Well, now we're talking about macroeconomics. We're talking about the flow of capital. So the first one, okay, the first analysis was the stock of capital. How much Japanese yen is there? The second one is the flow of capital. What is it? What is the Japanese yen being used for, and where is it located? If it's being used to buy local goods and services in Japan, it doesn't change the value. If it's in the interbanking system, it will change value because it's crossed a border. It's outside of Japan. So now we're talking about the stock and the flow of capital. The supply and the demand. And so, like, if you're a scalper, you probably don't follow that stuff. Well, if you can align what you're doing with longer term forces, you're going to be a monster trader. And not an options monster. I don't know anything about them. Okay? But anywho, so that's the world we live in, everybody. It's a beautiful place. It's a great time to be alive. You're good enough. You're smart enough. Gosh darn it, people love you. Okay? This is the right dream, by the way. I want you to understand that I'm an entrepreneur. And I, even now, even today, everything, I'm constantly looking at deals. I'm a hustler. And I think you need to be a hustler. We're all Forex traders. We're interested in this thing, and we all know 95% of people fail. So there's something wrong with you. You're broken. A logical, intelligent person would say 95% failure rate? Not me. And they go back to their accounting class. Instead, you're like, I can do this. Yeah. Well, hell's bells, huh? A little egotistical, are we? You need to have ego. Ego gives you the strength to survive the times when trading sucks. Otherwise, you just give up. Egotism is when you think you're good, but there's no proof behind why you think you're good. Why do you think you're going to be good at this? I don't know. I'm just born to do it. Oh, are you educated? No. How much time do you spend practicing? None. Do you understand macroeconomics? No. Do you plan your trades in advance? No. But you're going to be great. Why? That's egotistical. You just know it. You just feel it. That's a disorder. So we got to break that. But all we need to do is give you some education and some training and some knowledge. And then, oh my gosh, now you're appealing to your actual ego. Your strength becomes from your knowledge and your abilities that you can measure and test and reflect, and you know your strengths and weaknesses. And from that, you strengthen your ego and you kill your egotism. So I'm telling you, if you got the short-term skills, oh my God, you really are one of those people that have an amazing opportunity to be an incredible trader. And you're right. You are good enough, you are smart enough. But the thing is, if you're egotistical, you're like, I don't need the training. If you're egotistical, you're like, I can't give that guy $88. That's why he's on YouTube. Really? I've been doing this for 20 years, and that's what's holding you back? You think you're making me rich at $88? Really? Then you have a disorder. I want you to say, I'm a professional and I'll do whatever it takes to improve, and I'll consistently do that. Consistently, you mean like planning trades in advance every single day for 20 years? Yeah. How about spending, I don't know, what, $50,000 a year to get an education in economics and finance at Harvard? Are you willing to do that if you had the opportunity? I did. Right? So it's like that. It's like, are you a killer? Are you more than hungry? More than hungry. You're out there killing and eating while everybody is dreaming. Well, then look, you're in good company. So Investor Bootcamp, Quant Box, FX Bootcamp, right? It's filled with people like you that are killers. They're not big communities. I'm sure you've joined other expert gurus that have thousands of followers, and right? And awesome, good. That's not us. That's not me. We're very focused, driven, serious adults. So, hey, join us. Today is the training. Okay? I hope you're there. I'm going to be there. Oh, yeah, that's right, because I'm giving the presentation. So I'll see you guys in less than 3 hours. Okay? A community of killers. Market killers, okay? Crushers. Yeah. So anyways, but I got nothing but love for you, babe. I want you to succeed. It doesn't hurt me at all. Okay? I know trading alone was my greatest threat when I started 20 years ago. Now I think your greatest threat is listening to idiots on YouTube. And even me, I'm an idiot on YouTube, but I will teach you how to think independently and be a real trader. I don't know what everyone else does. Peace on earth. May your pips be with you. May your profits be above average. I'll see you soon.